Hey guys, how's it going? Welcome to the London session recap for Thursday, the 31st of March 2022 on Euro Dollar. So, 4-hour chart yesterday switched bullish. If you use the same swing structure that I have, as this was that last 80 pip pullback, right? Using those sort of new mechanical pip rules that we are currently using. Now, kind of sort of from a slightly discretionary perspective, I guess you guys have probably been hearing me saying on these recaps and both on the chart markups, I'm not entirely convinced on how significant this swing structure is. So I know some of you are using a bit more discretion and you're also viewing that as one 4-hour leg, right? And then this also being the 4-hour pullback. It's fine if you do it either way. And I know some of you are a lot more aggressive and you viewed that, right? Just try and be consistent. The reason why I'm not super bothered for me personally to call that a 4-hour leg, it's just because that's the daily leg, or I'm viewing that the same way as the daily leg. So as long as I'm also looking at the daily chart, then, in the back of my mind, I know that although we've switched bullish on the 4-hour, I'm not necessarily expecting that 4-hour bullish trend to last for very long, right? I'm not expecting this to go on and on and on. Why? Well, because it's likely, not a guarantee, but it's likely the 4-hour only switch bullish to do what? To facilitate that daily pullback, right, up into the daily premium, up into daily premium supply, right? So that's kind of, let's get rid of these markups from earlier. That's kind of why it's useful to look at the higher time frame or multi-time frame analysis, right? Look at the daily chart because we're bearish, right? And that range I was just saying, that larger range that some of you use in the 4-hour chart, that's essentially the daily range. So that's why I'm not too bothered to kind of do it that way, and I'm happy to have the 4-hour in the way that I've got it. But I'm just being aware in the back of my mind that 4-hour trend may not last very long, right? If we start to mitigate daily supply, right, we're currently in this level at the moment, or potentially we're going to come up to these higher supplies or potentially something in the wick, or of course there's always that possibility, right, we could actually switch bullish. I don't think that will happen. Try and keep things very simple. Assume the trend will continue until it doesn't, right? So we'll assume that we will take out this week daily low, right? But the small caveat that we are coming off that extreme monthly and weekly daily demand, right, which isn't too surprising why we're seeing a bit more of that steeper pullback. Okay, cool. So let's try and keep things super simple. The daily is bearish. We have pulled back into the supply here. It already had a mitigation and that reaction, which then failed, right? Because it failed to put in a lower low and it's now closed above here. So technically anywhere between the top of that reaction and the base of the reaction, right, that pullback, anywhere between these two orange lines is the daily demand that flipped this daily supply zone. So technically anywhere in here, right, we can see that daily demand come in to push up higher. Okay, I have marked on this daily sell to buy wick demand as well. It is there, it's valid. It broke this essentially substructure high, but I don't want to get too much bogged down with substructure, so don't worry too much about that. But yeah, this would be this sort of daily demand that has a lot more weight behind it if we were to pull back this deep. I don't know if we will. This is a sweep zone. It's the extreme of that reaction leg, so that would be a decent level to continue to look for those longs potentially into those levels, right? The other point I wanted to make about the zone as well is, although we've had a failed reaction and now in theory it's likely this zone should now fail, it's still valid until price trades above it, right? So there can still be plenty of orders within here that can either contain price to then continue it down, even though we've already had a failed reaction, or just enough to give us a bit of a reaction before we continue higher, okay? So I personally leave it to the side and drag the cross, but I'm still, again, aware in the back of my mind that we are still currently sitting within that daily supply, okay? So that does add into your decision making, right? You have to be aware of that. I was sort of not hoping, but anticipating we may potentially tap into this refined 4-hour pivot zone, right, the supply zone, before we might start to see that pullback. Of course, we don't have to, right? Once we're within this buy to sell range, there can be plenty of supply within here. We've now had that 4-hour bearish chop, right? We've come in, we've pulled back, we've come up, now we've had that chop. So that signals we can have that potential deeper 4-hour pullback, right, down towards this 4-hour supply zone. This supply zone did not sweep, doesn't really have any inducement because that's one straight push. So potentially this will just be a small reaction. It's in the 4-hour premium is all right to then come down lower towards this discount. However, this zone also has no inducement in the leg, doesn't sweep any liquidity. So it's not the best, but I don't weigh a massive importance on inducement with a pair like EU for me personally. Just otherwise you can end up missing a lot of trades if you always want that picture perfect setup. Whereas this is a flip zone, it's part of that overall demand chain, it's within the discount, so this would be a pretty decent level, and it would be within that daily demand zone. That's the extremity of that daily reaction leg, remember that I was saying, just point that out again in case that's a little bit tricky to track, this level here, okay? Cool, so so coming into London, we were bullish on the 4-hour chart and the M15. We were essentially around here, and I was anticipating potentially if that M15 swing structure can stay bullish, we may get one more leg up into the supply, and then we can start looking for those shorts. But as we can see, right, we've had that chalk now, and it's probably likely we're coming down to at least here or potentially lower. So that's the 4-hour chart. Then if we take a look at the M15, so I had a few questions about swing structure on the M15. So as not all of you are aware, but some of you are aware, hopefully the majority of you are aware, since the volatility has increased in recent weeks with the Ukraine-Russia war, we've adjusted the pip rule slightly. So instead of using 15 pips, we now use 30 pips on the M15, right? We doubled it. So if you use the 15 pip rule, then yes, this would be your swing low. However, for me, it wasn't 30 pips, right? So this would be the current swing structure we are using. That said, even though this would be our swing structure, if price breaks a low like this, right, which was, a significant pullback, you can still use that and use some nuance and tell yourself, okay, that's reasonably bearish information, right? Because it's somewhat of a significant low. Yes, it's not maybe what we define as swing structure, but it's still a decent form of swing structure, right? It swept liquidity, it had a reasonably sharp pullback, it's got a decent bit of momentum. So like once this low goes, especially with the momentum we've seen, right, you can go, yes, we are still technically bullish on the M15, but considering that was a decent low, it's where the 4-hour bearish chop was as well, considering how overextended we are, considering we've had the 4-hour break of structure, so we at any moment can now expect that 4-hour pullback, right? Once you see that let go and with tons of momentum, you do have to, view that with some significance in terms of the overall bearish picture. Okay, so let's kind of zoom in a little bit on what was kicking off sort of pre-Frankfurt. So we'd come into a refined supply zone, which you can go dig into if you look left. Let's just do it anyway. Almost there. Come on. Okay, this pullback here, extreme supply zone, slightly already mitigated, but nonetheless it had a pullback from there. Okay, cool, let's zoom in again. So coming into sort of pre-Frankfurt, price was around this level here. So we know what swing range we are playing within if you use the 30 pip rules, right, here and here. So this is always going to be your most ideal level to get long if you want to look for longs. Why? Well, it's the extreme demand zone, right, at the discount, it's swept liquidity, etc, etc. So if the M15 is going to stay bullish, basically this zone has to hold, right? I did also have the sell to buy wicks drawn on, right? Sell to buy wick zone drawn on, that flipped the supply level, right? We had supply here, that broke these lows, price came into it, reacted and pushed up. So that for me is a valid M15 POI. However, wick zones are not that strong, okay? They're probably sort of the lowest form of zone, even though it led to a break of structure, simply because that's you reading the lower time frame. That would be a lower time frame pullback. You're just reading it on this time frame. So for me, it's a valid M15 POI. But when you draw them on, actual M15 pivot candles, they are far more stronger than these zones, right? Because these zones obviously don't sweep any liquidity in this time frame. It's just not a proper pullback, especially when it's kind of in the middle of the leg, right? So this really is always going to be your highest probability zone. But anyway, we'll get back to that bit in a minute, focusing more on sort of the immediate price action. This is where it gets a little bit messy. So we had this M15 demand zone here, right? Obviously led to this break of internal structure, and that's where price was chilling in, coming into pre-Frankfurt. So it's valid demand. Doesn't necessarily mean I want to buy from there. Not really. It's in the premium. Yes, it did sweep liquidity. Yes, it did lead to that internal break of structure, etc., etc. But it's just not the best, especially when you have all of this unmitigated demand below. We're expecting that 4-hour pullback could be kicking in at any moment. Now, there was a nice M1 entry within here during Asia. So if you did take that, I think that's definitely more than valid. If we have a look at it here. So it'd be coming into that M15 demand, and then we clearly had an M1 shock here. Right, came into supply, fell to put a lower low and came up. So then this being your M1 demand range, right? So you can enter anywhere within there or refine it to that single candle. Hopefully if you took that and you covered the low, then you would have stayed in, and I would have kept you in the trade there, right? And then that would have been a pre-Frankfurt trade, essentially. That was during the Asian session. So by the time I'm looking to trade, it's at 7 a.m. and price is all the way up here at this point. Okay, so if you had taken that trade, nice trade, but you should have at least had your risk removed by that point. Now, I know a few people were, let's open this up in M15, looking at this being that iChock, right? That internal change of character, because obviously this is the active internal low at this point, and that's the active internal high. So you can't have any true change of character until either that lower high is gone. Okay, but remember, when it's pro trend, what we can look for, it's a bit more aggressive, is for that pro trend pullback, right? Because we want to look for a sign from structure that potentially this pullback is finished and that next pro trend run is going to go. But if the shock is down here and the active internal high is up here, well then, what can we do? What can we use as a signal? Well, we can just look at this going, right? And we can view that as what we call an iChock. But really we only do it when it's pro trend, right? We're looking for that pro trend pullback to be finished, and then we're looking for that sign there. Okay, so it's not the true change of character, but I think, iChock's the best name I think that we're using at the moment. So it is what it is, right? Now on the forex.com data feed, these were perfectly equal lows, which means that this was not a high that we could really view for that, but I know on different data feeds it was, so if you use that as your iChock, that's fine. On this data feed, this was the last pullback because this candle failed to break this prior candle's low, right, and then it got broken, so that means that then this was a high, okay? So that would be your iChock there, but even then, right, if you're looking at trades within here, it's still not the best. There was perfect equal lows behind it. You're buying in the premium, you've kind of got this inside bar here as well, like the supply. It's all just getting very, very messy, and that's just why I was just personally waiting for price to come down lower. So I'm actually going to delete this because I didn't initially have that drawn on. So at this point, I'm just chilling. I'm waiting for 3 zones really I was interested in. Like I was saying, mainly this one at the extreme. We had this one here as well. I wasn't a big fan of it just because it started by wicks, but I'll keep an eye on it in case we get really nice sort of setups here on the lower time frame, or potentially even an M15 bullish chop from it. Or we have this one, which is in the premium, but it's got a lot of confluence. Why? Well, we have this supply zone here, right, that led to the break of that internal low. So it's valid supply, right? It did something decent, it broke structure, price comes into it, reacts, fails to break the low, fails to put a lower low, and then price pushes up. So this here is the extremity of that reaction leg, okay? It's also part of then this demand chain, right? It mitigated this level. It also has inducement sitting above it. So that's a pretty decent zone. So then when we had that volatility, right, and price took out these equal lows, we then obviously then had that bearish change of character, that being the last internal low. Price comes down, first put in a high, and then we get a bearish chock, okay? Tap into this level, but it was obviously very volatile with news, and then we start to come up. So that's where we're now going to look on the M1. Okay, so we come into that level, we have a very aggressive reaction. Now we come up here and we start to pull back and we react, and then we push up and we have that chock. We obviously have the failed reaction as well. So then this is a flip zone. So for me, this is a flip zone to essentially, it didn't touch the inside bar obviously, so not the refined pivot, but essentially this M1 range supply. You could have also had it drawn on these buy to sell wicks as well. However, on this data feed, it trades slightly higher, right? So for me, that's not a valid flip. And instead you can view it as reacting to the M1 range, okay? Now, this flip did not sweep liquidity because that's one straight movement up, that's one straight movement back, and that's one straight movement up. Doesn't really have any inducement in the leg, and then you have this unmitigated extreme as well. It's also a lot of news volatility. It's all looking a bit messy. Basically, what I'm trying to say is I didn't have confidence to want to set a limit on that. Now, as price came in, it gave a nice seconds confirmation. So if you used 15 seconds, there's a pretty clean. I'll just show it for those of you who use seconds, right? Again, do not do this. Do not be tempted by this if you are not consistent on the M1, because it's very likely you will struggle. I'll leave that there. But yeah, we come in, we get our 15-second shock, right? And then there's your tidy entry if you wanted to use that for confirmation of that level. Cool, so let's get back to where we were. So at that point, I'm just chilling. I'm still not that bothered. Don't really like this stream either. I just don't like it when price is quite volatile and reactive like that. It's just typically it can be a bit tricky to trade. I find things can start to fail sometimes. So I want to see a bit more bullish order flow starting to kick in essentially, right? Again, keep things simple. Quickly remind you on the M15. I know I'm probably jumping a little bit around, a bit too fast for some of you. So essentially, we have pulled back, we've had our bearish change of character, but we then mitigated this M15 flip zone that had inducement, etc., with a lot of momentum, and then went up and just wicked the high, right? This being the internal high, because that's the nearest high after that low was taken. So basically in the space of about, 16 minutes or so, we'd had the bearish chalk, but then straight away we had the bullish chalk. So the way I was viewing this at this point is potentially we're going to have one last push up now to have that one last break of structure and then mitigate the 4-hour supply. And once we hit the 4-hour supply, then we're probably going to have the 4-hour pullback. So this is pretty much how my charts looked at this point, right? I was aware there would be some supply within here because that move led to a break of internal structure. But because it was all quite corrective, all of the distals of each pivot zone had been mitigated, right? Like this inside bar had already been mitigated here, right? And I knew there could be some left within here. But I was my brain was just ignoring it. Obviously, there's an element of FOMO and bullish bias there, right? And I just thought we might get one more move. And I knew it was aggressive, buying in a premium, trying to target for our supply before then getting that movement there, right? So that's essentially my view. So then once we then had this decisional flip hold, and then we had another nice bit of momentum, right? Another M1 break of structure there. Following then the potential demand chain, I was then happy to set a limit on here, and yeah, got smashed. Is what it is. It's an aggressive loss. I understand why. Essentially, price came in and mitigated some supply here on the M15, right? This inside bar that had led to that chalk, and then it got stopped out. Now at that point, I know some of you were looking at the extreme down here. This is just one of those things where at this point I took the loss. I just wasn't interested in the extreme, and it's hard to give you, a very mechanical reason as to why, but it's more just, it's just reading everything, having the overall contacts. I knew I'd already taken a loss on an aggressive trade. It's not a massive issue, but just with the way the M15 is looking, this big wick, a lot of volatility, we mitigated this supply here. We hadn't yet pulled back down to the discount of the M15 range. I'm aware, we could be expecting that 4-hour pullback at any point after the 4-hour boss. We're heavily bearish on the daily, etc. I'm just not a big fan of these kind of big volatile bits of price action. But if you did take a risk entry in here, right? Let's see, potentially you may have been able to remove your risk. I'm not sure. It's not the end of the world. Or for any of you who are waiting for the M1 confirmation entry from here, you never got it, right? Because the M1 high was up there, the internal high, so there was no one M1 change of character. But yeah, if you took a risk entry from here, let's see, 2 pips stop. You might not have even been tagged in, or maybe just, and yeah, you would have been risk to break even anyway. So yeah, there you go. So that would have been fine. You shouldn't have taken any losses there if you did like that. And then once that went, we started to sell off pretty aggressive at that point. A lot of momentum came in, essentially when this demand chain then failed. Smashed through that there, so there should have been no trades within theirs because the M1 just stayed bearish the entire time. And then we came into this extreme level, which we're still pausing around at the moment. So if you do take M15 risk entries, or even the M1 nested within it, this is more than valid. This is the time to do it because it's the extreme demand zone. So the M15 has to hold this if the swing structure is going to stay bullish, right? Does it make it super high probability with all else things considered? We've had the 4-hour chalk. It's likely we could see that 4-hour pullback. Maybe not, but if you want to keep things super mechanical, right, I don't think this is the most awful place in which to take those trades. What you can do, especially with the way in which this is sold off, is see if we can get an M15 bullish chalk first, but obviously that would have to be this high, so that's miles away. Or we may get, if we were to take this low, right, which would then give us a new high, and then we could wait for the M15 chalk. At that point, right, the demand would have failed. It's likely we're switching bearish in M15. So yeah, this is why I just don't really like it at this point. It's the end of the session, a lot of momentum. I think it's pretty likely we're going to pull back down to one of these 4-hour demand levels and potentially have a decent sell-off here. So we came with them with a lot of momentum. The M1 chalk, let's see where that would be. All of these candles break the prior candles low until here. So there has been one, but this is the end of the London session now. You can just see how much momentum there is. These are the types of trades which just really low probability, in my opinion. Just a lot of momentum. Look at the M15. I don't really want to be jumping in trying to catch a falling knife with the first M1 chalk. Yes, it's the M15 extreme. It's hit the refined M1 level. These can play out, but I'm happy to kind of, with all the entire context considered, I'm happy to, one, leave this because the session's over, but even if this was during the session, I'd probably want to see a bit more bullish order flow sustain, right? So just about had an M1 chalk. I'd want to see that level go. This come up here, maybe like form, hang on. like form a low here, then take the high, right? Then at least you have some inducement, you have a bit of a demand chain forming, and then you can start to work with that order flow and anticipate that, okay? So yeah, that would be my view of it. I think it's likely now we probably are going to see that 4 hour pullback down towards these levels. We may do, we may not. So I'd be happy to keep an eye on here, but we have to anticipate now is we've had that 4 hour bearish chock, so we could have that deep pullback. It's probably likely the M15 is going to switch bearish, but let's just react rather than getting, like, I hate getting too deep in forecast and predicting. Just try and keep things mechanical and let's see what happens. But yeah, with typically I would say you could wait for the M15 chop, but for the reasons I just explained, we're not really going to get one until all the way up there, so that'd be too late anyway. So if you are looking to trade this, I would try and wait for a bit more bullish order flow to sustain, but this is looking pretty messy and not that clear at the moment. So this is where I'd just be patient and wait for something to set up pretty clear unless we start to give some more clear bullish order flow. But I'd be waiting, or I would advise you to wait until New York anyway, if you like to do things the way that I do them. Other than that, I don't really have too much to add. Just, if you look at my New York markup yesterday, one of the points I'm really trying to drive home, not even just to you guys, but also to myself, is just keep things simple. Just be a little bit more patient. Stick to those, what we know are the easier and more high probability setups. And what I'm really trying to say here is just wait for those pro trend M15 moves only that are well priced, i.e. if we're getting long, right, the M15 is bullish, just sit and wait for price to come back to those discounted levels, right, those real clean levels. Of course, that will mean you will miss some trades, but it is what it is. And then it can help you to sort of avoid the unnecessary noise and risk that can happen when we try and buy in the premium. There's not really too much else to add to that. I would really recommend, if you've got some time and you're looking to do some things, literally just take the M15 chart. Don't look at anything else. Go back to the start of the year. Just draw an all M15 swing structure and only draw on the M15 POIs, the single candle pivot POIs that are in the discount if it's bullish or in the premium if it's bearish. And you'll just see, right, how much, how much easier things can be, even over the course of the month. Yes, you may miss a lot of trades when prices got a lot of momentum, right? It's trending strong, but you can start to bring those in as you gain more experience. But if you're getting chopped up on a lot of this more aggressive stuff, just leave it alone for now, right? Just be a bit more patient, sit in your hands and wait for that pro trend stuff that's more well priced, right? Essentially the beginner trade plan. Don't veer too far off from that. Cool, I'll leave that there. Hopefully that makes sense. As always, if you've got any questions about anything we've discussed in here, then don't be afraid to give me a shout. Cheers, guys.